Now here first on CNBC is Chewy CEO Sumit Singh. Sumit, thank you for joining us again on Closing Bell. A surprise profit that you swung to, more than 50% revenue growth. Give us some color on what's behind those numbers.
It's nice to be here, Sarah. You know, the results are, in my opinion, a direct result of the journey that we've been talking about. You know, we've been positive EBITDA all the way through this year, and this quarter was no different. If you break down the quarter, we saw, you know, a lot of structural, sustainable mix shift happen between our consumables verticals into premium verticals such as hard goods or proprietary brands and healthcare that actually drove, a tremendous uplift in gross margin. And then, there's a little bit of profit taking that is going on, or that we realize due to, the strong pricing position in the marketplace right now. You know, the promotional environment was generally a bit muted. But even if you subtract that, we would have delivered a pretty solid positive quarter, both on a profit basis and on a net sales basis. It's our first $2 billion quarter in the history of the company, and something that we're tremendously proud of.
So the question is now the staying power. It looks like you are giving a forecast. What are you seeing now in just recent weeks, and as more people get vaccinated and economies start to open up more? Are you seeing any changes in trends or spending?
Yeah, Sarah, you know what? The dynamics of this past year and our performance have provided us an advanced look into Chewy's future. And we believe that future is bright, and the momentum is sustainable on the back of tremendous market opportunity that's come in, across a secular shift that's happening towards e-commerce channels, which we believe is largely durable and permanent. And in addition to that, all of our efforts that in the past I've talked about, our focus on growing healthcare, our focus on growing proprietary brands, adding more and more active customers to our platform. I mean, we serve over 19 million active customers at this point. And if you notice, those customers on a year-over-year basis are spending more with us. So in 2020, these cohorts spent 12% more on an average than their predecessor cohorts. And we're actually bullish on these trends. So we believe there should be sustainable power moving forward here.
Do you think work from home and the events of the last 12 months have driven more pet sales or purchases, and also driven premiumization in terms of what people spend on their pets? And could, therefore, those two trends go away in the next year or so?
It certainly has, Wilfred, but not to the extent of actually higher pets in households. So that statistic is actually what's driving more of the premiumization if you look at it. So I'll give you a data point. If you look at pets per household or household owning pets, we'll come at it the same way. Last year saw roughly a 5.6%, 5.7% increase in pets per household. And that, bucks the last 5-year CAGR of 0.6%. You combine that with the fact that, there is just this kind of massive secular shift that's happening towards the channel, that it's easy to actually transact and procure without making it run to the store. And what we will continue to see is customers remaining engaged, particularly those kind of new puppies and kittens that came into the household. When you look at us, we saw a 35% increase in number of pet profiles created for puppies. Well, that's great, because that Chewy puppy is going to grow up next year and eat more food and shred more toys and need more healthcare needs. So from that point of view, that's sort of why we believe these trends are sustainable and why we're in a really good position to capitalize on them.
Shepard Smith here. Thanks for watching CNBC on YouTube.